So let's take a look at how we make a trading plan. Now, why should you make a trading plan in the first place? Your trading plan is a set of rules in which you follow when trading. For your strategy to be profitable, you must follow the rules in alignment with your plan. If you need flexibility, then you build in a rule that defines how flexible you can be. A trading plan is usually set out into different sections. Think of your trading plan as your Bible. So let's take a look at how we build a trading plan. The basics of a trading plan consist of the instruments that you trade. So is that Euro USD, GBP AUD, USD CAD? What instruments are your favorites? What instruments are you going to be trading? You don't want to have 26, you want to have, I'd say, less than 10. So try and establish what pairs are your favorite and then make a note of them in your trading plan. What are your rules about open positions and risk exposure to particular currencies? So let's say you don't want to have like 3 or 4 positions running on all euro pairs, for example. So if you're just shorting the euro and you have 3 or 4 different positions running, shorting the euro, if that goes against your trading plan, because in your trading plan it states that you can only have 2 positions running on one particular currency, then you know that you're not obeying to your trading plan rules. What days and times of the day do you trade? What are your money management rules? And what times do you analyze and order the market? So do you start from the weekly to the daily to the 4 hour, or do you go from the monthly? So how do you analyze different time frames and what order do you do that? So next you need to highlight your rules for you to enter a trade. So this is essentially highlighting the rules in which you apply when executing your strategy. So if you're going to go long, has price rejected a Fibonacci ratio, for example, or is price above the 1 hour 50 EMA, or was the last candle close bullish? If you're going to go short, has price rejected a Fibonacci ratio, is price below the 1 hour 50, and was the last candle bearish? So these are all things that you need to be asking yourself before you enter a trade, and obviously have them written down in your trading plan so that when you're looking for a particular opportunity and you're applying your strategy to the market, these are the steps in which you take before executing a trade. So it all goes back to referring to your trading plan before you enter the market. What rules do you use for you to set your targets? So are you going to be using a Fibonacci extension, the minus 27%? Are you targeting the previous high or the previous low? And what rules do you use for you to set your stop loss? Is it above or below a Fibonacci ratio, like the 61.8% or the 78.6%? Are you looking to place your stop loss above or below market structure? Or maybe above or below the 1 hour 50 or the 4 hour 50 EMA? Under what general circumstances do you not trade? So here in your trading plan, you're going to list a few conditions why you wouldn't trade, for example. Are you not going to trade because there is a public holiday where there could be lower volume? Are you not going to trade just before a major news event? And how long after the event are you not going to trade for? Are you not going to trade 10 minutes before or after 10 p.m. GMT because the spreads are usually higher at 10 p.m. GMT? Are you not going to trade because perhaps you're stressed or under pressure about something, so therefore you're going to be in the wrong frame of mind? Or are you ill? Are you suffering with an illness at the moment, so therefore you're feeling really under the weather and that's going to affect your decision making? Under what circumstances do you stop trading for the day or for the week? Are you going to stop trading after so many losses in a row or losing a certain percentage of your account? Or are you going to stop trading if you've made X amount of profit or percentage on your account? Are you going to avoid or re-entering a pair if you've just made a loss on that particular pair? Or are you going to give it another go? And are you going to avoid trading, say, after 5 p.m. on a Friday afternoon? So then do you have any other additional rules that aren't already covered? For example, how often do you review your strategy and what pairs do you trade? So do you review your strategy every 3 months? Do you carry out a review of yourself and your performance over the last 3 months? Or is it every 6 months? Or is it annually? And highlight your go-to pairs that you trade And do you tweak those? Do you remove a pair or do you add a pair? How often do you review your trading plan? So, do you review your trading plan every 3 months or 6 months? Do you tweak it? Again, that all goes back to your rules and your strategy. How often do you cover your trading journal? Do you look at it every weekend? Do you look at it every month? Do you go back every 3 months? Try and identify any significant areas in which you can highlight that you seem to be making the same mistake over and over again. Is there one particular pair that you continue to lose on? Is there one particular pair that you see a winning streak, therefore that's going to be one of your favorite go-to pairs? Can you identify any bad habits in your trading journal? And again, how often do you review your trading journal? Because I think it's important to review your trading journal at least once a month. Definitely keep on top of it and see if there are any patterns that continue to reoccur where you may need to tweak something or adjust your strategy or your risk management. Are you cutting your winning trades too early? Is there anything that you're missing there? Once you have written your trading plan, feel free to send it to one of the team for review. It's best to print it out and pin it up in front of you so when you trade, you can refer to your plan at all times. Remember, you need to be able to follow your plan with discipline and take full accountability for your actions.